Is trending Tesla stock a buy now? Tesla stock, for those of you who don't know, is sitting at a key point of support. If it can hold the psychological $200 level, we could see this one go up higher and as high as 270. Do not forget that this is the stock that can drop just as quickly as it can rise. So if the market gets a nice big bounce on Monday, we will see this one come up very fast to 210 and then possibly 220 during the following week. Tesla stock is one of the most watched stocks by Saks.com. Visitors lately, over the past month, the stock has made a lot of people money if they bought the dip under 200. We do have the Robotaxi event as well. That's going to be probably the biggest going into October. And if we switch over to let's look at the financials here. Tesla stock financials. Let's go to TradingView. But I believe Tesla stock is a buy under 200. Anytime it's come under $200, guys, anytime it's come under $200, you see what's happened? Here it came down as low as 100, and what a massive move to the upside. Anytime it's come under 100, even here it came down as low as 184, bounced to 260, 170, bounced to 300, almost 400, and that in my opinion is very telling, because if we switch to the higher time frames, you'll notice, I mean, every single time this thing has come down under 200. Let me draw a line here for 200. I'm going to give this stock a buy. Tesla stock is a buy under 200. Accumulated, don't be scared. Accumulate it under 200. And then when it pops, when it goes on that next cycle to the upside, take your profit and move on. I wouldn't buy exactly at 200. I would wait to see if it comes down as low as 180, somewhere around there. But either way, I think Tesla a buy just on the technicals alone. Let's look at the financials just to make sure we're not missing anything that would make us go, ooh, maybe we shouldn't touch that one. They got a free cash flow of 1.34 billion. That's nice for Q2 2024. Balance sheet. Let's look at their I wonder what the equity is. 67? 60%? That's not wow, their assets to liabilities ratio. That's nice. 112.83 billion versus 45 billion in total liabilities. Let's look a little deeper here. What's their accounts payable? 13.06 billion. I'm curious about their total assets as well. Total receivables 3.74 billion. Total inventory 14.2 billion. Okay, so there's nothing here that what I'm looking for right now is there anything on the financials that I should be concerned about that would make me go, you know what, even if it is a buy on the technicals and my battery is low, even if it's a buy on the technicals, maybe financially speaking, it's not a good company to own. So why would I want a piece of it if it's looking bad on the financials, right? So that's why we have to look at both the technicals and the financials. Most people think I'm just a technicals guy, but I do look at the company's financials just to make sure, like, you just don't want to buy and hold a garbage stock. Their revenues quarter over quarter, let's go to the annual. Okay, annually they've been increasing the total revenue. The cost of goods sold pretty high up there. Operating expenses, there's no way they're profitable, right? Their net income, wow, their net income has been positive. Wait, where are they getting all this money? Net income from before discontinued operations. Okay, so they have no way, they have a positive net income here, but why? That doesn't make sense. Where is this money coming from? Oh, it's because their operating expenses are very low. I'm shocked. I am very shocked right now. I am shocked. I'm not used to seeing stocks this amazing when it comes to operating expenses. So they make, look at this, 96.77 billion in total revenue, cost of goods sold almost 80 billion, but their operating expenses is really low actually. Look at that. 4 billion, 4.64 billion, 7 billion, 7 billion, 8.77 billion. They keep their operating expenses very low. I thought their operating expenses would be higher because that's what I'm used to seeing. I'm used to seeing companies whose total revenues are like, let's say 100 billion, but their operating expenses are like half of that, if not 75% of it, of their revenue. So that's why I jumped the gun and said, "Oh wow, there's no way they're profitable with this much cost of goods sold, and their operating expenses much must be ridiculous." But it's not. Their operating expenses are actually pretty low. I'm surprised. So wow, this is a guys. Are you kidding me? Those bears can suck a banana. This is a buy, guys. Under $200, I'm giving this a buy. That's it. Under 200. Anytime it goes under 200, buy it up, accumulate it. Don't be scared if it even goes to 100. We've seen this is so volatile. It can come down as low as 100 and then rise to 400 or 300 for a nice 3x. So, in my opinion, this is a buy, not just on the technicals, but on the financials. I'm very shocked. I've never seen this is the first time I've seen a company with such low operating expenses. Usually those tend to be pretty big. But in Tesla's case, it's whew, I wonder how they're doing it. I'm gonna have to do some research. But anyways, that's it for the video. Don't forget to like and subscribe. Tesla under 200, a buy, accumulate it, sell it when it pops to 250 plus.